What if I told you the smartest investing strategy is also the simplest? No flashy stocks, no crypto hype, no trying to time the market. Just a steady, boring method that quietly builds real wealth over time. It's the same approach used by countless millionaires, and it's hiding in plain sight. The man who made it famous, John C. Bogle, he didn't just talk the talk, he built the $7 trillion company on this idea. It's the common sense truth Wall Street doesn't want you to know. Let's dive into the investment philosophy that made Bogle and millions of everyday investors financially free. Welcome to Book Ovation, where powerful books become bite-sized financial wisdom you can actually use. Today, we're breaking down the Little Book of Common Sense Investing by John C. Bogle, the legendary founder of Vanguard. This isn't your typical investing book filled with hype or hot stock tips. It's a sharp, no-nonsense guide that flips the script on how wealth is really built. Simple, powerful, and proven. This book is a mindset shift that could change your financial future. The central idea of the Little Book of Common Sense Investing is surprisingly simple but incredibly powerful. Stop trying to beat the market and start owning it. John C. Bogle argues that instead of gambling on individual stocks, chasing trends, or trying to time the market, strategies that often lead to stress and losses, there's a smarter way. Invest in low-cost index funds that track the entire market. No guessing, no hype, just steady long-term growth. Why does this work? Because over time, investors actually underperform the market. Why? High fees from active management, emotional buying and selling, and poor timing. It's a costly game. Index investing removes those traps. It cuts out the noise, lowers fees, and lets compound growth do the heavy lifting. It's not flashy, but it works. And it's the exact strategy Bogle used to help millions build real wealth. 1. The costs of active investing. John Bogle doesn't just tell you what to invest in, he shows you why so many investors lose money without even realizing it. One of the biggest silent killers of wealth? fees. Actively managed funds often charge 1 to 2% annually. That might not sound like much, but over time, those tiny percentages take a massive bite out of your returns. Let's say you invest $100,000. A 2% annual fee over 30 years could cost you more than $250,000 in lost growth. That's not just money lost, it's time, opportunity, and financial freedom gone. Bogle also points out how high turnover buying and selling stocks frequently leads to more commissions, more taxes, and more risk. It's like running on a treadmill expecting to move forward. His message is simple: the less you pay, the more you keep. And over decades, that difference is life-changing. 2. Why most investors underperform. One of the boldest claims John Bogle makes in the Little Book of Common Sense Investing is this: even the pros can't beat the market consistently. Fund managers, analysts, and Wall Street experts, people paid millions to pick winning stocks, rarely outperform the market over the long run, and when they do, it's often not skill, it's luck. Bogle backs this up with study after study, showing that short-term success doesn't translate into long-term results. In fact, by the time you hear about a hot fund or stock, the real gains are usually already gone. Chasing past performance is like driving forward while staring in the rearview mirror. It feels smart, but it usually leads to disappointment. Bogle's advice? Skip the hype, stick with broad, low-cost index funds, because in the end, the market wins, and trying to outsmart it is a game most investors lose. 3. The power of index funds. Index funds are beautifully simple, and that's exactly what makes them powerful. Instead of trying to pick the next big winner, an index fund tracks a market benchmark, like the S&P 500, and automatically invests in all the companies within it. That means you're instantly diversified, owning tiny pieces of hundreds of businesses across different industries. From tech giants to consumer brands, you're not betting on one company, you're betting on the entire market. This strategy does 3 critical things. It spreads your risk, cuts down on fees, and lets your money grow steadily over time. No fancy tricks, no expensive managers, and no chasing trends. And yes, it's boring. There's no drama, No headlines, no rush of a big win, but that's the point, because in investing, boring often beats brilliant. And as John Bogle taught us, simple, steady, and low cost wins the race. 4. Staying the course. One of the most important lessons John Bogle teaches is discipline. Markets rise and fall, it's part of the game. But the key to success isn't timing those ups and downs. It's staying invested through them. When markets crash, fear tells you to sell. When they soar, greed urges you to chase returns. But reacting emotionally almost always leads to poor decisions. Bogle's philosophy is clear. Don't try to outsmart the market. Instead, trust in the power of long-term growth. By staying the course through bear markets, bull markets, and everything in between, you give your money time to compound. The strategy isn't about days or weeks. It's about decades. That's how wealth is truly built, quietly, patiently, and steadily. So resist the urge to panic. Tune out the noise, and remember, the market works for you, but only if you let it. By the time you finish the little book of common sense investing, you'll walk away with 3 powerful truths that can transform the way you think about money. First, you don't need to be a genius to invest. You don't need insider tips, fancy degrees, or hours glued to financial news. What you need is consistency, the discipline to invest regularly, stay the course, and avoid emotional decisions. That's what separates successful investors from the rest. The market rewards patience far more than intelligence. Second, time and low costs matter more than timing the market, chasing the perfect moment to buy or sell. That's a trap. Even the pros get it wrong. But keeping your money invested in low-cost index funds, where fees don't eat away your returns, lets you harness the incredible power of compound interest over the long term. It's not about what happens this year or next. It's about what happens over 10, 20, or 30 years. And third, simplicity wins. Wall Street loves to make investing seem complicated because complexity justifies high fees. But Bogle shows us that a single, well-diversified index fund, held for decades, can outperform the majority of actively managed funds and high-risk strategies. Why? Because it eliminates human error, slashes costs, and captures the full power of the market's growth. So no, it's not about gambling on the next Tesla or catching the next meme stock wave. It's about building real, lasting wealth with patience, discipline, and common sense. That's the message Bogle leaves us with. And it's the one that could quietly make you a millionaire if you're willing to play the long game. John Bogle's message cuts through the noise with refreshing clarity. Investing doesn't need to be sexy or exciting to work. In fact, if your portfolio feels thrilling, if you're constantly checking prices or chasing the next big thing, you might be doing it wrong. True, lasting wealth isn't built on drama. It's built on discipline, slow, steady, intentional investing that compounds over time. Bogle reminds us that the market rewards patience, not adrenaline. The little book of common sense investing isn't just a beginner's guide, it's a reality check. A wake-up call for anyone still caught up in the idea that they can outsmart the system. Because in the end, the goal isn't to beat the market, it's to join it, stay with it, and let it work for you. And that, Bogle teaches, is the smartest move of all. If this video gave you a new perspective on investing, or helps simplify the way you think about building wealth, go ahead and hit that like button. It really helps support the channel and tells us to keep making content like this. And if you're hungry for more powerful insights from books that actually make a difference in your financial life, subscribe and turn on notifications so you never miss a new video. We've got a lot more coming your way. Lady, for your next step, check out our summary of The Psychology of Money by Morgan Housel. It's the perfect follow-up, diving deep into the mindset and behavior behind great financial decisions. You can click the link right here on screen, or find it in the description below. Until next time, invest smart, stay consistent, and remember, common sense is not so common.